Hello and welcome to the Weekly Outlook at XM.com. Next week will be action-packed with the spotlight falling on the latest U.S. inflation report. We'll also get central bank decisions from the RBNZ and the Bank of Canada, with the BoC's decision currently priced as a coin toss. I'm Maria Pachortiz, and joining me is senior investment analyst Marios Hadjikyriacos. So Marios, let's start over in the U.S., where the economy seems to be doing well. We'll get the latest inflation data on Wednesday, and the question is, will these numbers confirm expectations that the Fed will resume its rate hike cycle this month? And what's the outlook for the dollar?
Hello, Maria. Let me start with the dollar. So what we've seen lately has been a little bit of a stalemate in the Forex market. So the dollar has been drifting sideways for the most part, even though incoming data has painted a picture of a strong US economy. So economic growth seems to be running around 2% in the US. The housing market has enjoyed a massive recovery, and the jobs market looks to be in pretty good shape. So investors responded to this encouraging data by pricing in a higher for longer path for interest rates. They basically pushed out the timing of any rate cuts into the second half of next year. And in turn, we saw some pretty impressive moves in the bond market. The 2-year yield hit its highest level since 2008 recently. And yet the dollar could not capitalize on these positive developments, which I think reflects the strength in other major currencies, specifically the euro and sterling. We've seen their central banks telegraph several rate increases ahead, and that has helped both the euro and the pound to be pretty strong, and that has almost offset the strength of the dollar. Now, the upcoming inflation data could help to break this stalemate. Inflation in the US is expected to have cooled in June. The headline CPI rate is expected to have declined to 3.6% from 4% previously, which sounds very encouraging, but I have to caution much of this improvement is due to base effects. Some very hot monthly CPI prints from June last year will now be dropping out of the 12-month calculation. So inflation is coming down, and that has also been confirmed by business surveys, but not at the pace that the CPIs would suggest, not so quickly. Now, as for the dollar, Maria, I think that the outlook looking into the second half of the year is quite bright, and it's really a story of a relative economic performance. The US economy is far superior to the Eurozone economy or the Chinese economy at this stage. And if you look at business surveys, they suggest that this gap could widen further as the year unfolds, because the US economy, business surveys suggest the US economy is likely to remain resilient, but Europe and China are losing momentum very quickly, in fact. So the FX market has been trading almost entirely on interest rate differentials lately, central banks, yields, and so on. And that has helped to helps to explain the strength in the euro, right? Because the European Central Bank has maintained such a hawkish stance. However, I think that with central banks approaching the end of their tightening cycles, the next theme for the FX market might be growth differentials, which clearly favor the US economy at this point.
Now, we also have 2 central bank decisions in Canada and New Zealand. How are those meetings likely to play out, and how might those currencies react?
Yeah, so let me start with the easy one, which is the Reserve Bank of New Zealand. Nothing much is expected. The RBNZ told us at its last meeting that they will probably move to a wait-and-see stance, that they will examine incoming data for some time before they make their next move. And ever since that meeting, data out of New Zealand has been mixed. There's nothing shocking enough to nudge the Reserve Bank of New Zealand out of its neutral stance. So that means the reaction in the New Zealand dollar might be relatively minimal, and overall the New Zealand dollar is likely to remain in the hands of global risk sentiment and any China news, and specifically whether Chinese authorities announce a stimulus package sometime in the future. Now, in Canada, it's going to be a much more interesting meeting because, as you already pointed out, the markets are a little bit split on what the Bank of Canada is going to do. The markets are assigning almost equal chances for a rate increase or no action. Now, it's a really difficult choice for the Bank of Canada because inflation has been coming down very steadily this year, in fact, and that's the most important element for any central bank. So that suggests the Bank of Canada is likely to remain on hold. In addition, we've seen the manufacturing sector struggling and oil prices have also declined pretty substantially, also arguing for the Bank of Canada to do nothing. The problem is that the labor market in Canada is still very tight, consumer spending has been very resilient, and housing costs have not really cooled despite the sharp increase in interest rates. And that's mostly because of population growth and immigration trends. Now, what's most likely to happen? It's a really close call whether they will raise interest rates or not. But for the Canadian dollar, I think that the risks are tilted to the downside, Maria. So with inflation coming down, it would make more sense for the Bank of Canada to take the sidelines for now. But even if they raise interest rates and we see the loonie moving higher, there's still a risk that the initial excitement could fade very quickly if policymakers signal that this might be their final move, which it probably will be. So I think that the risks surrounding the Canadian dollar overall for next week are tilted to the downside.
Marios, thanks so much. And thanks for joining us at XM.com for this weekly outlook.